Welcome to episode 29 of Fish Wrap TV. Today is Friday, September 10th, 2021. I'm your host, Janie Hansen, filming your weekly market update live from Blue Earth, Minnesota, here with Q Lair. Big news today is the WASDE report. Then we'll talk about the Gulf, and followed by the Producer Price Index report from this morning as well. Q, what's the WASDE story?
Well, we had quite a wild day today. After the WASDE report, we were expecting, this is the first big September report we've seen in years. Usually we get out of our systems in July and August, but September, like we've been talking about, I don't think the USDA has got their shit together here with the numbers and everything else. So the market is still uncertain about what's really going on. But at any rate, the corn acres came out at 93.3 million acres.
So that's inching closer to the 94 number you were talking about earlier this year?
I'm afraid so. I guess the Q was right all along, yet again.
So the acreage is up a little bit. How about the yield?
The yield is also up at 176.3. So they really, they really raised the carryout, 1242 to 1408, which is, 1.408 billion bushels of corn. We were talking earlier in the crop year that it was going to be under a billion, because of what was going on with the drought and everything else. So the pressure is definitely off this market, especially on the nearbys. And soybeans, the acreage came out at 87.2. It was ag Twitter war today, because we know they're wrong. They won't admit it. There's 2 million acres out there somewhere in soybeans, just somewhere. And sure as hell they'll find them sooner or later, whether it's even, we were arguing it could be just January, and they'll just throw it in the final and wipe it out and be done with it.
At the end of the year.
Yeah. But by that time, it's well into the crop year. Yield went up to 50.6. So from 50. So even though we've been talking about the dry weather, we've been talking about this, the stresses on the crop, it continues to improve.
Yeah, holding steady, and a little improvement.
Right. So we've got carryout and beans now at 185 versus 155. So it's up another 20% or whatever the number is, about 20%. But we were talking the carryout under 75 million bushels back when we were talking corn under a billion. So the worst case scenario for carryout is really way past us now, and we're heading into just full marketing year to see what happens. So and of course the wheat market, the wheat came out as expected. We're pretty much 3-4 months into the crop year already, so we know what's out there. So it's really a little bit of this versus a little bit of that is really between classes. And stuff like that. What is emerging as a story is that the durum stocks worldwide are as low as they've ever seen them. Okay. So, there's people squawking in Italy about the durum prices.
Yeah, wait for that pasta.
Yeah. So, we had acreage way down, because what we've been doing is we've been transferring, normally our durum is growing up in North Dakota. We've gone into 7 million acres of beans up there. Okay. So, we've cut seriously into...
Soybeans been buying some acres from Durham.
They have bought a ton of acres from Durham, and the same with Canada. So, on this hemisphere, well, actually this continent, Saskatchewan and North Dakota produce virtually all the durum that we use in the United States. And it's really, it's at least half of what it used to be. Because I remember when I was a kid, young trader, they were producing 125 million bushels. Now it's down to 60. Really? Yeah. So, we've got, quite a bit of durum pickup in Argentina, so in the southern hemisphere, a bit in Australia, but we've also had a bit pickup in Spain for production. So, it has been made up, but yet you get short years like this of a crop that size, and look out. So, we've been talking about inflation, so prepare for your durum and your pasta to be a little more costly. Gotcha.
So any other impacts from the WASDE report on the wheat market?
Not really. The thing that keeps bugging me is the spreads. Okay. The spreads are wide. If this market were really good, and I keep talking about this, if this market were really good, these spreads would not be here. They'd be a lot tighter. Okay. And, we talked about, remember July, November was like $2, $2.50. Then it went down to like 70, 80. And now, Nov Red Nov is down to like 30. Okay. So, that's come down from 80, 90. So, these things have just snuck down quietly, in these markets. And, the basis is really kind of staying where it's at. So, this is what is so cool about how good commercials are, because the thing is, if you're wanting to draw grain a certain, from one place to another, you have to do it by price or by the spread or by the basis. Okay, one of those three things. So what the commercials have done is they bought the basis cheap, and now they've got the basis relatively stiff, and they're short the board. So what they're doing is by keeping the basis stiff and drawing through basis and leaving the board alone, the board is decaying.
Okay.
So that's how this game is played. Cargill and Dreyfus just had the biggest financial years in their history. We're talking over a century and a half. Okay, for both. So it's really amazing how these guys have played this. They played it just like the Chicago Symphony under Schulte, and it's really, I've never seen anybody like this. So normally I'm pretty negative about commercial traders, because it's like, if they were really good, they'd be out there trading 100 lots with me.
Oh, on their own account.
Yeah. But they've got some good things going here, and they've played this very, very well. And I think it also shows that the more information you have, the better things are. So Cargill is got 50 cards out of 52. The biggest traders in the world have 40, 45, and then the Twitterverse has 20. All they do is bitch after they get rolled over. But it's really amazing to watch this, and my hat's off to Cargill for the first time in years. So I guess I can respect them after all these years. We've been at battle together. Yeah.
So speaking of Cargill, what's going on with the Gulf of Mexico and those impacts from Hurricane Ida?
This is really interesting. The river is actually open because they've cleared the barge disasters up there. Where they went aground, et cetera, et cetera. Cargill is still down without electricity. Dreyfus is back up now.
Okay.
So they're fully back up in the Gulf. 50% of all export traffic elevators are going to be back up next week.
Okay.
So there's two classes of what's going on down there. One is they're just out of electricity. So what they got to do is get their electricity back on, get everything recycled and everything else. Then there's Cargill, which actually had physical damage to the facility.
Yeah, so that would be some construction.
Right. So that is an indefinite when it's going to be back online. But of course, where they build bins, I'll be shocked if they don't have this thing going before corn really starts moving in Dees down to the Gulf. So, but anyway, Dreyfus is back up 50% more. So we should be back up 75, 80% by next week.
Okay.
And of course, the river, the basis is starting to improve a little bit, but yet we're not seeing it in the spreads. So it's so good what these commercials are doing.
So moving on, that PPI number I saw this morning, was that real?
The number came out, and even on Bloomberg, I was watching on Bloomberg when the thing broke. It looked like somebody shot their dog on the TV. It was up 8.3% year over year. This is the highest number in recorded history. Okay.
So the jump in the producer price index.
This jump is the biggest
that's one
ever.
of the key inflation metrics.
Well, yeah, this is your wholesale prices. So, the bad news is the worst is yet to come, because this is what the producers are paying.
And it hasn't worked its way into the
Right.
retail.
This is like what Walmart and Amazon are paying. Now wait till you get to the next level.
Consumers.
The next level, which is of course the CPI. And we've been laughing at the Fed for months, and now the laughter has become something like these guys need to go, kind of a deal, because this they have really screwed the pooch on this one, and it is disastrous because so many people are on, these fixed government payments, and their purchasing power is just decaying by the month. So, and of course, I lived through the 70s with Jimmy Carter.
Yeah.
All you youngsters, you have no idea what 10% inflation is like. And when the government admits there's 10% inflation, you bet you know what, that it's a lot higher, which means your purchasing power is just eroding. And the only way to keep up is to get higher and higher salaries, which of course, creates the spiral.
For that stagflation.
Yeah, stagflation, because, the economic growth is starting to slow down. Goldman Sachs, all the numbers are they're dialing down their expectations, especially for 2022. I mean, I'm seeing numbers now for 2022 that are looking at GDP growth at 3 instead of 6. So, that is not good news. But anyway, the market's telling us that, it is euphoria out there. 35,000, they just keep buying.
Yeah.
Like there's no tomorrow. But of course, I've been around this game a lot of times when everybody thought this stuff couldn't go down, and look out when everybody tries to get through the door. So it's really, really fascinating what we're seeing, but it's really starting to work its way, in my opinion, into very dangerous territory, which is diesel nat gas blew through $5 like it wasn't even there this week. Okay, 3 months ago it was at $3.50 and $3.25.
Yep.
And 6 months ago it was at $2. Okay, so now we've got $5 nat gas, and there's just no end in sight now, because one of our friends out in New Jersey, New York, she's a big nat gas trader, and she says, well, the bad news is that U.S. nat gas is the cheapest out there because of the disaster of the Nord 2 pipeline coming out of Russia. So, into Germany. So even though it's $5, it's still the cheapest out there. So, there's going to be a hard bid under this thing for quite some time. And that's really bad news because, energy, our economy is a function of energy. And as energy goes up at this pace, if economic growth doesn't match it, then we begin to see a decay.
Yeah, coming into winter with the heating.
It's that, and what it does is the thing is that if it's your purchasing power, and if you're spending double on that gas versus what you did last year, it's not what you're spending on Christmas or whatever, birthdays. So it's really, this eats right into the bottom line of the household balance sheets. So very, very interesting. Got to keep your eye on this thing.
Yeah. Well, any other things to keep an eye on in the markets in the coming weeks?
Normally, I really hate to lead off with natural gas, but this is serious, folks. I mean, this is serious stuff. Crude oil is kind of stalled at 70, 65 because people just aren't driving because of the the COVID restrictions and everything else. But this nat gas thing is for real. So, I mean, you could see people up in New England paying $20 for nat gas this winter.
Yeah. Ouch.
Yeah.
So, all right. Well, that's all for this week's Fish Rep. And to hear more as we're coming into harvest for grain producers on hedging, check out the farmcfo.com for the Croptimize Hedge Report under the Croptimize Pro subscriber dashboard. Thanks for tuning in.